if we take a step back and we think of a typical balanced portfolio and what we think underneath the labels, what do you think is quietly missing?
Yeah, and that's a great question because, even for myself, if I look back at my own personal investing, my personal portfolio has been 95% in the resource space over the last couple of years. But I think one way to kind of benchmark what a balanced portfolio should look at today is actually just the S&P TSX composite index, where, like you mentioned, maybe like a year ago, some of the key commodity exposure, including energy and materials, have been at their lows. But just given the run up over the past year, we're starting to see a pretty good portfolio mix here, where within the S&P TSX composite, you're looking at about 30% financials, where Canadian banks have held up great, and you're looking at energy index kind of back up towards the 15% mark and trending higher given all the geopolitical events that's kind of playing out in the world, and materials at a healthy 20% weight, given the phenomenal run last year. So if I was kind of like a new investor coming into the space, this is actually a pretty good mix, going into what I think will be a volatile space across the entire market, just not just within the resource space particularly. So that's certainly a good benchmark to start. In terms of what investors could be missing by underweight commodities in this part of the cycle is, number one, I think you're really just missing a lot of potential upside going from here, where I think we're really going into a super cycle where you have many different commodities